It's 6 o'clock in London. It's 1 p.m. in New York. Actually, it's 2 p.m. in New York because this time of the year, the clocks have changed in the USA, but they haven't in Europe yet. 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID live stream, Series 10, Episode 5. That makes a cumulative 59 starts here. Oh, the production team are very excited to get you involved today, ladies and gentlemen. They want you to vote now for the best title for the NSE India saga of recent weeks. You'll remember that was, of course, the problems with Colo that have led to all sorts of issues with Chitra Ramkrishna and indeed her former chief something or other officer, chief guru officer perhaps, Anand Subramanian, both being in jail as we speak. Their offers are the lady and the yogi, or the trading queen and the mystery guru. I'm personally surprised they missed that classic, the holy hoax. Vote now, whatever social media you're looking at this on. Of course, allegations of misconduct may just delay the exchange's much long-awaited IPO, but also hurt its growing clout in the global equity market. We shall see. One place that's not being hurt this week, those are the good folks of Aquis Exchange. Congratulations to Alistair Haynes and the team at Aquis. They've just acquired the UBS MTF, a symbiotic deal, putting them into the dark trading movement in London. Great to see them. Hopefully more and many great blocks to come from Aquis Exchange in the near future. SIBO, talking of block trading, they have appointed Stephen Burt. He's going to be the president of BIDS Trading. As you'll remember, they're the semi-autonomous, but nonetheless fully owned SIBO block trading facility. Elsewhere, congratulations to European issuers. The chairman, Luc van Steenkist, he's going to be joining the EFRAG Sustainability Reporting Board, being the only representative of public quoted companies in Europe. And then, ladies and gentlemen, the highlight of the People Moves of this week, David Goon has left the building, I mean the Atlanta headquarters of the Intercontinental Exchange and indeed also their Chicago office. He has been the man present at many of the milestones in ICE's incredible rise to prominence across the exchange world, and they're reaching the peak of Tier 1 in the pyramid. He oversaw ICE benchmark administration. He represented ICE at the DTCC, OCC, and NFA. He also, of course, mentored last week's IPO guest, Trabu Bland, who's now stepped up to being global president of ICE Futures. If you missed Trabu's show, then you've got to watch back through our highlights. You can catch it on YouTube or indeed LinkedIn or Facebook, wherever you're watching this today. An absolutely epic edition, Master of the ICE Futures. Now, all this news and more has already been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse Business. Send us an email or hit me up, Patrick L. Young, on whatever social media or stream you're watching this on today, and we can get you signed up to understand the exchange business. Our guest today, ladies and gentlemen, Etan Butler. We're going to be discussing success in the US alphabet of crowdfunding. Etan Butler is chairman of Dalmore Group. It's a FINRA-registered national broker-dealer cum investment bank founded in 2005. Etan has led the meteoric growth of Dalmore from a traditional full-service investment bank to industry-leading specialization in assisting companies that seek to raise investment capital from individual investors through the SEC's Regulation D, Regulation A+, and Regulation CF. They've undertaken at Dalmore no fewer than 200 successful offerings to date, and I believe the pipeline's still very full. Etan, welcome to the show. Where in the world are you today?
Thank you. I'm in New Rochelle, New York.
New Rochelle, New York. Now, help us a little bit with that. Whereabouts is that in relation to, say, Manhattan?
A bit north, about 30-minute drive in Westchester.
Westchester County. That helps a great deal, I think, for those of us who are not absolutely precise in our geolocation in New York. Lovely to see you today. I, incidentally, am in Miami, Florida, ladies and gentlemen. We're still here as a result of the fabulous Boca Raton conference we were attending last week. Thank you, ladies and gentlemen, for your comments already. Good evening, Marcus Ward. Delighted to see you joining us bright and early this evening from the UK. Lovely to see you. So, Etan, explain to us a little bit about how you managed to create Dalmore Group in the first place.
My partner and I founded Dalmore Group in 2005. Prior to that, I was focused more on trading stocks, on alternative trading systems, and on proprietary trading solutions. And we founded Dalmore in 2005, and we spent the first 10 years or so focused primarily on providing institutional investment banking and corporate advisory services to private and public companies. And then in 2012, at the time of the Jobs Act, we made a shift to helping companies raise capital primarily online at scale through regulations D, A, and most recently CF.
So a few months ago, we had the joy of having that man, the father of crowdfunding in many respects, David Weil IV, was with us. But perhaps you can just run us through to help us, particularly our European viewers again. Remind us, Regulation D, Regulation CF, and Regulation A, please, A+.
Regulation D allows companies that are raising capital to raise an unlimited amount of capital, but only from accredited investors, right? Investors that make a certain amount of capital per year, or have a certain net worth outside of the value of their home. Roughly 8 to 10% of U.S. investors are currently considered accredited. Regulation A allows companies to raise up to $75 million per year from anyone over 18, right? Accredited and not yet accredited investors. And Regulation CF allows companies to raise up to $5 million a year, also from anyone over 18, accredited and not yet accredited.
Perfect. Beautiful surmise very easily. And you can see, ladies and gentlemen, why we're discussing success in the alphabet of crowdfunding this evening with Etan from Dalmore. Greetings. Let me say hello to Anthony Clancy and Craig Richardson. Thank you very much for your comments today. We'll be delighted to receive a little bit of love as well, ladies and gentlemen. Remember, every time you like this show, it helps us go up through the search engines, and therefore more people can learn how they too can manage to profit from crowdfunding. So Etan, you described this very interesting way. You came out of doing a lot of trading on the alternative trading systems, the ATSs as you call them in America, what we call the MTFs from Europe, and then you got into the whole crowdfunding world. What was it like at first when you were taking your first steps in this amazing alphabet of crowdfunding?
So we were amongst the first broker-dealers to play the role of broker-dealer for companies looking to raise capital online. That was soon after the Jobs Act in 2012, 2013. And at the time, we were focused primarily on Regulation D issuers, mostly in the real estate space. And then late 2018, when Regulation A really started to take off, right, only in 2019 was there over $1 billion a year collectively raised through Regulation A offerings. So it's still young. It's grown almost at 100% per year since then. But we took on our first Regulation A client in late 2018. And since that time, we've become quite active in the space. We currently have over 200 Regulation A clients, including many of the most successful Reg A's to date. We've been fortunate to be the broker-dealer on. And, again, the benefit of Regulation A is that if you're conducting an offering where you're planning on marketing and promoting the offering, you generally will see a much better return on advertising spend if your offering is open to anyone over 18, not just accredited investors. Another benefit of Regulation A is that there's an immediate path to potential liquidity, whereas with Regulation D and even with Regulation CF, investors have to hold their securities for a minimum of 1 year before they could trade those securities.
Okay, now that's very interesting. So let's just unpack that a little bit. You mentioned the fact that you can go straight to a liquidity event with Regulation A. So how is that done? I mean, are the companies going to listed exchanges or are they going to other platforms?
You could do both. We work with private and public companies, right? The majority are private, and for those who are interested in creating a secondary marketplace for their securities, they generally do so through an ATS, an alternative trading system.
Okay, so they go to an ATS, and there's a kind of a network, I think, these days of ATSs that have actually grown up for these sorts of private stock deals. Am I correct?
Yeah, it's still early days in alternative trading and secondary trading of private securities, but there's a number of broker dealers that are approved to operate ATSs. Dalmore does not have an ATS. Instead, we look to partner with a number of different ATSs so that we could kind of provide our issuers with the right secondary market solution. So we do play the role of broker on the secondary market trading activity, as well as the primary issuance activity, and we plug in to an ATS for clients that have an interest in doing so.
Very interesting. And in fact, actually, if you recall, if you've been watching all of these episodes, we were chatting with, I do believe it was Shari Noonan of Rialto a few months ago. She's one of the platforms that offer these sorts of services. And I do believe we've got a couple more platforms coming up in the near future that we'll be able to talk to. So, Etan, if I'm doing one of these offers, let's just take a hypothetical case. I mean, when a company phones you up, gets in touch with you, however, and says, we're looking at raising money, how do you guide them in terms of what's the best letter of the alphabet for them to be pursuing in terms of an offering?
First, it's how much they're looking to raise, right? So if they're looking to raise above 75 million a year, then Regulation D generally will be their best bet as far as considering. If they're looking to raise up to $75 million a year and they're relying on the success of their marketing and promotion of their offering, Regulation A could be a really good solution for them. And if they're looking to raise up to $5 million, Regulation CF is a good solution to consider. Regulation CF could generally get up and running much quicker than a Regulation A because Regulation CF requires it's a notice filing with the SEC, whereas Regulation A is a qualification process. You have to submit the offering to the SEC, you have to wait a period of time to ultimately get qualified.
So that leads to an interesting question then. So obviously, if you've only got a notice filing, presumably it's a matter of essentially weeks in order to get your ducks in a row and do your paperwork and so on, and then you can move on almost immediately with your application.
That's right.
Okay. And therefore, if you've got to go to somewhere where you're going to do a qualification filing, then how does that work in terms of what's the sort of turnaround time we can expect from the regulators?
So you have to hire a securities attorney whose responsibility is to help you structure and draft your offering circular, which is called a Form 1A, which is ultimately submitted to the SEC for qualification. On average, we're seeing qualification times ranging from between 60 and 70 days from initial submission. Sometimes a lot quicker, but that's been the average so far, 60 to 70 days from submission.
Mm-hmm. That's not a terrible turnaround time, but obviously it's a reasonable impediment as we're going along in these tightly regulated times that we have in markets the world over. So that's obviously something to bear in mind. What's the issue then, obviously, of cost? Well, you've already alluded to some of it. You've got to have a higher grade attorney-client relationship and so on when you get further up the scale. What are the other additional costs that you need to consider when you're going for a larger offering?
Well, if you're looking to raise over 1.07 million in a Regulation CF offering, you need audited financials. 2 years if you've been in business for 2 years. In addition, if you're looking to raise capital through Reg A, you also need the same audited financials. Regulation A, there's going to be a higher cost for securities counsel because their job is a lot bigger, right? They have to help you structure this kind of broad offering circular, the Form 1A, and submit it to the SEC and respond to questions, ultimately driving the offering to qualification. So it's generally a more expensive kind of upfront structure for Regulation A, and it takes a bit more time.
Okay, so obviously time is money, and that's one of the issues as you're going ahead. In terms of the offerings you've been looking at over the course of the last couple of years, I mean, you alluded to one thing, the incredible growth in this segment. You were saying, did I hear that right? 100% growth per annum we're seeing in some of these segments?
2019, over $1 billion. 2020, 1.7, I believe. 2021, there was close to 1.7 in the first 6 months. The SEC is a bit stale on their reporting, but I imagine it's probably in the $3 billion range. So yeah, it's close to 100% growth per year for Reg A.
That's absolutely staggering. It's incredible, and it's also quite fascinating given the fact of we are talking about the United States of America, where there's already an incredibly strong venture capital, private equity marketplace as well. I mean, it strikes me as amazing that you can get that sort of growth. Do you think that's being driven because there is an investor appetite to get into these companies, or because there are companies that are finding it difficult to get, say, venture funding?
I think it's both. If you're a minority or a female, it's historically been challenging to get the attention of Wall Street investment banks to engage with, to help you launch, and raise, the capital that you're looking for to scale your business. Regulation A allows anyone, any issuer, to really take control of the outcome of their capital raise activity, to go to their own community, to market and promote their offering on their own without relying on a investment bank to engage with. At the same time, investors, right? Especially not yet accredited investors, have had a challenging time participating in investment opportunities that might become the next big thing. And Regulation A gives everyone over 18 the opportunity to invest in companies that resonate to them, that they believe in, and to build a portfolio of venture capital-like investments in different companies that they choose to participate in. So it's really is beneficial to both the issuer and also to investors.
That's fascinating. It's so interesting to hear about how that crowdfunding movement is managing to bring people together. It's really awesome, as well as you mentioned the whole issue about diversity. And that's something I'm sure in our production gallery, the ladies are most excited to hear this evening. Particularly, I do believe we've got some of the representatives of women on it helping us this evening, and their show will be along roughly the same time tomorrow, 1 hour earlier in US and European time. Really interesting. I mean, 100% per annum, $3 billion a year. Where do you think this market can go to in the near term?
I think it's going to continue to grow at the same scale. And I think that, Regulation A really allows for entrepreneurs to take their opportunity to the masses. I think that generally it's an alternative to venture capital and private equity. So the issuer is the one who gets to decide on the structure and the valuation that they're bringing to market, as opposed to, trying to get the attention of venture capital firms or private equity firms, who it's difficult as it is. And the valuation and the structure might not be what's in the best interest of the issuers. It's also very helpful for companies in that you're able to market your brand and your products and your services at the same time as you're marketing your investment opportunity. And it gives you the opportunity to onboard hundreds or thousands of investors on your cap table. So that if you're a consumer brands company, you're able to target your existing customers, fans, followers, users, and subscribers, and give them an opportunity to become shareholders in a brand that they support.
I think that's a fascinating point, and whether it's a minority interest, whether it's a majority interest, no matter whether you're spread in a very narrow local area or whether you're right across the country, Really, really interesting how you can get success in the alphabet of crowdfunding, Etan, from being able to reach out and have your customers as shareholders. And certainly we've seen that in the United Kingdom, where one of the things which has proven particularly popular in crowdfunding has been craft beer, because the people who drink it like nothing better than being part of this extended club. You raise an interesting point in relation to the advertising, the marketing, the promotion, etc. So how do things tend to work in the USA? I mean, you get the permission to go and do your crowdfunding according to the appropriate rules, and therefore whether you're dealing with accredited investors or non-accredited investors. Are people tending to spend a lot of time actually trying to reach their user base, or are they just blithely buying, I don't know, Google ads or other display ads in order to manage to reach potential shareholders?
It depends on the issuer, and what we like to say is that if you're solely going to rely on digital marketing, sometimes that can be challenging to get a sufficient return on advertising spend. It's oftentimes more expensive and takes longer than one might expect. I always like to say that you want to approach a crowdfunding offering with as many advantages as you can, and what I mean by that is, if you're fortunate to have an existing ecosystem of followers, subscribers, users, customers, that's great. That puts you in a position to have potentially a lower cost of investor acquisition. If you have a influencer or a celebrity involved in the offering, that's great, because you could leverage their fan base, their customer base as well. If you are super relevant, that could, to what's going on these days as far as being either a minority-owned business or involved in blockchain or real estate or a number of different service-oriented businesses that are relevant to what's going on today, then that puts you in a stronger position on a PR perspective. So it's really a combination of leveraging your existing fans and followers and subscribers, digital marketing to kind of extend that beyond, and also syndication opportunities, right? Reg A, at least with our model, allows for issuers to host their offering on their own domain. What that means is they get to put a Invest Now button directly on their own website, right? So they become the beneficiary of their own marketing and promotional activity. They're also able to co-list their offering on other platforms or syndicate the offering with other investment banks or broker-dealers who could, open up their network of retail investors to participate in the offering as well.
Very interesting altogether. And thank you. Good evening, Ian Bonsource. Lovely to see you again this evening, saying good evening to everybody. So we're here discussing the alphabet of crowdfunding with Etan Butler. He's the co-founder and chairman of the Dalmore Group, with over 200 successful crowdfunding issues in the course of the last number of years alone. Quite spectacular. I see Charles Ask. He's saying San Diego is great craft beer. Not all of it crowdfunded, I do believe, but certainly no doubt about it, there's some great crowdfunded craft beers out there as well. And I think we might have had a comment actually also from Women on It somewhere along the line, but I can't seem to locate that just at the moment. Got a great question from Robert Brown. How important is the secondary trading aspect to crowdfunding investors, Etan?
Well, it hasn't been utilized that much yet. But what it represents is a path to potential liquidity for investors, which makes a whole lot of sense, right? As opposed to waiting for a liquidity event or a sale or a going public event, it gives investors the opportunity to both buy shares that they may have missed in the IPO if it's closed, as well as offer their shares for sale, hopefully at a profit, but not always. So I think where we've seen most of the secondary trading activity has not yet been in regulation CF offerings, right? Regulation CF offerings have to wait a year to season their shares before they could make their shares available on secondary trading. I think we'll see more of that over the next year and moving forward. Where we see most of the secondary trading interest and activity is amongst our fractional share series issuers. These are companies in the collectibles space, in the fractional share real estate space, in the art space, music space, and what they're doing is they're issuing they're issuing shares of specific assets, right? As opposed to raising capital for a traditional Reg A, where you could sell shares and raise up to $75 million a year. Fractional share series issuers are qualified to raise up to $75 million a year, but they're doing so through releasing specific assets, whether that's collectibles in the sports world, or whether that's real estate, single family homes, or racehorses, or pieces of art. They generally will launch individual assets with low per share, entry points, $10 a share, $50 a share, and that's where we're seeing most of the secondary market trading activity. It's amongst the collectible space and the real estate space, but I think that's going to continue to evolve. And many of our clients, especially our new clients, have a real interest in incorporating a secondary market trading strategy into their business model at the start.
That's really interesting. Most interesting altogether when you talk about all of these aspects of the collectibles market and how that's been going. These are a new platform. Are those guys then using, is that a tokenization approach using the blockchain, or is it simply a shared fractional ownership of the individual units?
It could be both. And we have a number of issuers who originally will contact us with digital ambitions, right? They'll be interested in tokenization and blockchain. The reality is you don't necessarily need that. When you're launching a Reg A, you're able to fractionalize and issue shares in physical and digital securities, and you're able to facilitate the secondary market trading of those securities without tokenizing, right? With regard to the blockchain, with a regulated offering, a Reg A offering, and a Reg CF offering, the transfer agent that's involved really maintains the cap table. And so you don't necessarily need a blockchain component yet to accomplish your objectives of fractionalizing, issuing, and facilitating secondary market trading of securities.
Very interesting. So just to go back a step there, you mentioned transfer agents. Explain to us a little bit their function and indeed how they exist in the overall chain of crowdfunding, please.
Yeah, so a transfer agent's primary role is to maintain the cap table, right? So all of our issuers work with a transfer agent who maintains the cap table, and also in some cases helps with shareholder communication. So it's a SEC regulated enterprise, the transfer agent, and so whereas in the non-regulated world, the benefits of blockchain give that transparency and that immutable kind of ledger to account for all the transactions and the shares. In the regulated world, ultimately, it's the transfer agent's role is to kind of protect the process and maintain the integrity of the process and the accounting of who owns what for each of the issuers.
Fantastic. Thank you very much, ladies and gentlemen. We're halfway through the show already. I'm here with Etan Butler. He's the principal, the chairman of Dalmore Group, one of the co-founders of that organization. They got over 200 successful offerings at the peak of the crowdfunding world. We're talking about the success in the alphabet of crowdfunding. And of course, one of the topics that we've touched upon already was diversity, how you can manage to get out there and reach a minority audience. Thank you, Women on It. Women on It embraces crowdfunding. Great to hear from you this evening. We're looking forward to your show tomorrow. Great questions come in from Simon Huckle. Clearly, it's a hypothetical. Good evening, Etan. Say I own a small stock exchange, say in the United Kingdom, and I want to raise $100 million to take the exchange to the next level. What would you say would be the best way to achieve this?
You couldn't do so through Regulation A or CF. In order to qualify for either of those, you need to, for Reg A, you need to either be, the issuing entity has to be based in the US or Canada. For Reg CF, you need to be based in the US. So I would consider perhaps a Regulation D or an S, depending on where you plan to market and raise capital from. That's the direction I would go in Regulation D.
Okay, so sorry, you just mentioned something there. I'm not sure we had. Did we have Regulation S earlier on, and did we define that?
Regulation S allows for you to raise capital from international investors outside of the US, from both accredited and not yet accredited investors.
Very interesting. Thank you for that. We are working our way through the entire alphabet. In fact, we'll be into, I don't know, hiragana, katakana, and kanji soon, as the SEC seems to expand the number of letters it wants to ascribe to the world of crowdfunding alone. So, okay, so the idea for them would be something like a D, something like an S. I hope that helps you with your question. Simon, thank you very much for your question this evening. If you've got a question for Etan, ladies and gentlemen, all about the alphabet of crowdfunding and the possibilities therein, don't hesitate to ask. We've got just under half an hour of the show to go. Thank you very much, Robert Brown, as well. You made another comment there in relation to the settlement of overall investments. Reblockchain, not everyone wants their transactions followed. I think also, I mean, the problem seems to me is that certainly the SEC at the moment has a great deal of wariness about anything that suddenly hits a blockchain in relation to cryptos and all sorts of other things. So therefore, it's very interesting, Etan, to hear about how you're talking about fractionalized ownership can be a great way forward without having to worry the regulatory powers that be.
Yeah, I mean, look, as far as transactions followed, if you're doing this in the regulated way and you're looking to sell securities in the US, there's transparency, right? It is followed. And that's the safer, more conservative way to approach it, especially if the asset is considered a security. And there's a whole lot of regulation going on. There's a whole lot of enforcement going on in the area. And we're seeing more and more companies that are looking to issue assets, consider them securities, especially if they're looking to market them and sell them to U.S. investors. So there is transparency, and that's healthy for the industry and for investors who participate in these offerings.
That's a very, very interesting point, because you mentioned this, and it seems to me crowdfunding really is a very holistic process. So therefore, the original concept of, just stick yourself on a website somewhere and hope that they'll all turn up and invest in your security, it's just not going to happen, right? I mean, you've really got to go out there and build a process and work very, very hard to get your investors in.
Look, we've been fortunate to have a number of very successful Reg A and Reg CF clients. The ones that are raising significant capital are effectively marketing and promoting their offering. It's not just you build it and they come. You have to get sufficient number of eyeballs on your offering, and you have to have a message that resonates with potential investors to inspire them to click invest now and to enter their credit card and ACH information and sign a subscription agreement. So absolutely, the success of these issuers really comes from effectively marketing and promoting their offering. If you could do that sufficiently, then you'll generally do well. Whereas if you just set up an offering and expect people to find you without marketing it, it's going to be challenging.
So you've got to do your legwork, you've got to do your homework, you've got to be prepared for the event itself. Are there any particular hints, tricks? I mean, when I use tricks or cheats in the gaming sense of the word, I mean ways to get you there faster rather than anything that might be discerned as being illegal or unreasonable under legislation or rules. But are there any hints or tips that you can give people that can help them really manage to accelerate their crowdfunding campaign at different levels or in different ways?
Yeah, I mean, kind of like I mentioned, if you're solely reliant on digital marketing, we've seen people succeed with that. We've seen people struggle with that, right? So digital marketing is an important component of an offering, and you need to have either internal capabilities, or you may consider hiring a marketing or an investor acquisition consultant. The other advantages that are super important are if you're fortunate to have a base of customers or followers or subscribers or users, that's super helpful. If you have access to or involvement of an influencer that has a broad reach, that's great. If you're offering appeals to a number of financial publications or newsletters that have an interest in featuring your offering to their base of subscribers and users, that's also great. There's also syndication opportunities, right? So there's a number of broker dealers that have retail bases that have interest in different sectors of Reg A offerings. So, again, you're able to have your offering conducted on your own domain, where you could steer all your press, all your promotion, all your marketing to your own domain. But you're not limited to that. You're also able to enter into relationships with other investment banks or broker dealers to leverage their bases. So it's really a combination of digital marketing, effectively monetizing your own network of your own ecosystem of followers and participants, syndication opportunities amongst other firms, exploring, the financial publication world. And collectively, that could put an issuer in a good position.
Very interesting. Let me ask you something just about the campaign itself. In your experience, do you really have to hit the ground running, or do you find that there are campaigns that can be a slow burn at first and then ultimately successful?
It's both. Sometimes it takes some time to find out from a marketing perspective what's converting right. It's all about return on advertising spend. We have some issuers that have it down to a science. For every dollar I'm spending on Facebook marketing, I'm yielding X dollars in offering proceeds. Right. So if you find a good conversion, then that's where you pour the gas on. That's where you allocate more of your marketing budget towards. But it could take some time to experiment to find the right process and strategy that's working. So it's both cases. It's some issuers that have an existing base that they could leverage, or a strategy they could leverage right from the start. Others, it takes some time to experiment to find what is generating the highest conversion before they really take things to the next level.
Okay, and that's very interesting, because you mentioned earlier on the possibility of using, for example, syndication and also investor acquisition consultants, I think you said, etc. If we blend this all together in a very rough basis, because as you say, there's a cornucopia of difference between all of these campaigns, what's the sort of cost of capital that people are anticipating on the way through in order to manage to raise money?
If you have an existing base of customers, followers, fans, subscribers, or if you get featured in a publication or a newsletter, or you have access to an influencer or a broader reach or a partnership, then your investor acquisition cost is going to be a bit lower than one that's kind of a business to business company that is starting from scratch. It's hard to say because it varies so much amongst different issuers, depending on the structure, the valuation, the industry, the marketing strategy. What marketing companies will generally tell you is be prepared to spend somewhere between 5 and 15% in marketing for relative to how much you're looking to raise in the offering. I don't know how accurate that is because it really varies pretty significantly, but that's what we've seen marketing and investor acquisition companies advise clients.
Okay, that's a very interesting number. So something like 5 to 15% is obviously quite a range. Interesting question actually just comes in on that whole topic. So what sort of newsletters are good for finding crowdfunding investors, Etan?
There are all sorts of newsletters out there. A number of them look to us for introductions to potential issuers that meet their criteria. But there's a growing number of publications, financial newsletters that have groups of paying subscribers that are looking for vetted opportunities, right? So lately, they're interested in minority-owned businesses. They're interested in environmental impact companies. They're interested in things having to do with technology, blockchain, crypto related, in some cases cannabis related, and it varies, right? There's also real estate financial publications that focus on real estate issuers. We have a number of REITs, of single family home issuers. So it really varies. There's a number of them depending on the industry that the issuer is part of.
Very interesting. Thank you. We're discussing success in the alphabet of crowdfunding with Etan Butler of the Dalmore Group here. And we've got a question from Robert Brown. Robert Brown is asking, what marketing companies do you hold in high regard?
I'm not going to give the names right now, but I think at this point we know most of the companies that want to be known in the that specialize in marketing to crowdfunding campaigns. We keep a list of them. We take a look at how they've worked with other issuers of ours, how successful they were, what type of feedback we're getting from our clients. And marketing companies are really good at marketing themselves, right? At this point, we've seen almost all of them succeed and fail. We just like to be super transparent with our clients, but very frequently we're asked to make introductions. So usually we'll send 3 or 4 of the marketing companies that we've seen deliver for other clients in similar industries, and we'll make those introductions to our clients.
Very interesting. Thank you very much, Etan. Thank you, Robert Brown, for the question. If you've got a question, we've only got, just about 15 minutes left, ladies and gentlemen. So you better rush, manage to get it into this discussion about success in the alphabet of crowdfunding. I'm here with Etan Butler. It's a very interesting discussion from start to finish. So let me ask, you've talked about things that work. You've talked about how people are reaching diversity, how people are reaching all sorts of different sectors and so on. Is there anything in crowdfunding on any of the alphabetic letters that you've seen that really just did not work, Etan?
There's hundreds of millions of potential investors for an offering, right? So if you have an interesting company that is appealing to enough investors and you are able to get that message in front of enough investors, you're putting yourself in a pretty good position. But we've certainly seen a number of issuers that have struggled to kind of get things going sufficiently. Usually that has to do with not having the right marketing strategy or not having the right marketing budget, right? Or not having an existing ecosystem to kind of build off of and kind of get some momentum through. So critical here for any crowdfunding campaign is marketing and promotion. You really need to have a strategy there and some wisdom there. Without that, and without a sufficient budget to really pay for the marketing and promotion, it can be challenging.
Very interesting altogether. Quite a key point in terms of how you've got to really utilize your marketing and your communication at all points in time. Good evening, Peter Secon. Evening, all he's saying. I hope that your young son and heir, Ari, is watching us this evening from the sofa for the first time. He must be, what now, 10 days old, I do believe. Great to see you this evening, Peter. Thank you for joining us. So, Etan, you go through this crowdfunding process. You have a successful campaign. You get the money. What do you find is the best way forward for companies after they've done their campaign? Are there a lot of people concentrating on maintaining that shareholder relationship? Is there an ecosystem for maintaining shareholder relationships? So
we have private companies, and all the way from startups to more advanced companies that are launching campaigns with us. Some look to stay private for a period of time and then incorporate, an alternative trading system to provide a path to potential liquidity for their shareholders. Many have going public ambitions, and they use a Regulation A offering to build up a sufficient number of investors and capitalization to meet listing requirements. And we also have publicly traded companies on the OTC that use Regulation A to bring a unique share class structure to investors. So it really spans the spectrum. It's a way to position yourself to market and raise capital from anyone over 18 with the share class structure and valuation that you determine.
That's very interesting. Now, you're talking about share class structures, and you mentioned the OTC marketplace in the US and so on. What sort of differentials can you have in these share class structures when people are coming forward and issuing?
Voting, non-voting, preferred, common, debt, safe notes. It's almost limited to your imagination. You have perks that you could include. You have different tiers that you could include. There's so many different solutions for companies to consider as far as what type of share class structure they want to bring out to the public. Most of the issuers are issuing common or preferred, but we also have a number of yield offerings, right? REITs that are offering potential fixed returns to investors with monthly or quarterly payouts.
That's fascinating to hear altogether, and certainly intriguing that you can manage to segment the market in different ways to give people something that they want and therefore attract presumably sticky investors and more investors to your platform overall. So therefore, those different classes of shares, say for example, you're already listed on the OTC market, do all of those different classes of shares automatically trade in the OTC market thereafter, or do they have to go to maybe an ATS or some other facility for the different categories?
The OTC companies are generally offering shares at a fixed amount, oftentimes below the price of the security at the time that the offering goes live, or they're including a warrant, right? And those become shares of the similar share class structures to the existing shares, just at a different kind of entry point, which is different than kind of the way it works in the private market space, where there's all types of flexibility as far as what you're bringing to market. But we're seeing more and more OTC companies. I think we have about 20 or 25 of our issuers are on the OTC. So we're seeing this. We're seeing a big uptick in that right now.
That's interesting. And do you think that uptick from the OTC market, is it driven from the fact that the crowdfunding market is just so active, or are there cost benefit advantages for raising money, or is it just faster?
I think it's probably a combination. But again, for an OTC company to use Regulation A, here's an opportunity for them to broadly market the offering, to put an invest now button directly on their own website, and to market and promote the offering at the same time as they're marketing and promoting their stock. And that's interesting. And it gives you the opportunity to bring on more shareholders, right? At whatever investment minimum you want to put out there. And the user experience, when you log on to someone's website and you click on the Invest Now button, and you could buy those shares with a credit card or an ACH or a wire transfer, makes the process super efficient and quick, right? So I think that's part of why we're seeing a lot of increase in the usage of Reg A amongst OTC companies.
Great. So in other words, it can be a marketing tool, it can be a capital raising tool. It gives you a lot of flexibility, which you don't get when you're in the OTC or indeed the public securities market, because obviously you can't put a button on your website and say, buy our stock now. That's somewhat frowned upon in these days of intermediation in the SEC at public market level. That's really, really a very, very beneficial advantage to all parties. I can see that. So what do you think the future, the near term holds in terms of what's going to be going on in the marketplace now? Are you seeing more new companies coming to market, i.e. those who have not previously crowdfunded, or is the market increasingly being dominated by people coming back to the market who've previously funded and reached their maximum limits in previous years?
So we're seeing both right now. It's still early days in crowdfunding in general, right? Regulation A, again, only 2019 was the first year that over $1 billion was raised collectively for Reg A offerings. So we're still at a very early time. We do have a number of our issuers that have had successful raises and have launched a second Reg A, even a third Reg A in some cases. So I think that the number of repeat issuers is going to continue to increase. But up until now, it's been new companies, either startup companies or companies that are pre-IPO that are looking to raise that $20 to $75 million slug, but to do so directly to their base or to the general public, as opposed to through the venture capital or private equity route.
Okay, that's really a very, very interesting point, that how it's diversified amongst people, but it's still very early days. And we have a question from Peter Secon. Peter asks, Etan, how do you manage delays and non-deliveries in rewards and donation-based crowdfunding? That's not necessarily your thing, but you can have a stab at it anyway, Etan, please.
In donation, so we're not involved in donation-based crowdfunding, although you're able to incorporate perks and rewards as part of the Reg A or Reg CF offering, and that is something that is managed by the issuer, not by us.
Okay, let me ask a question related to Peter's question. Issuers themselves, they take the money, they go away. Have you had problems with issuers simply spending the money and disappearing, or has so far everybody been reasonably well behaved and at least made a stab of using the money in the way that they anticipated they were going to in their crowdfunding offering documents?
So far, we there's no fraud that I'm aware of that has occurred with any of our issuers. I hope that remains. It's something that it's something that with the growing number of offerings, you have to be careful, and an investor has to diversify amongst different offerings, because these things can happen. We do our due diligence on the issuing entity, on the officers and directors, right? We make sure there's no bad actors involved. So you do what you can as far as diligence to hopefully prevent as much of this as possible. But there's I wouldn't be surprised if there was issues that happened in the future. You try to do the best you can as a regulated entity to prevent these things from going live to start. You need to get SEC qualification to launch a Reg A, and but again, it's you always want to be careful from an investor's perspective to diversify amongst multiple offerings, as opposed to extending yourself too much in either one.
And therefore, we come back to the core laws of investment. Do your own research, ladies and gentlemen, despite the fact that people are attempting to regulate this market throughout. And equally, don't put all your eggs in one basket. You need to have some degree of diversity. So common sense applies throughout this process. We're coming close to the end of the show today, and I'm really interested, Etan, you've talked about the incredible growth in this crowdfunding market over the course of the last few years. I'm curious, obviously, I wrote a book, Capital Market Revolution, many years ago, which said we were going to get closer to a fintech world where there'd be a lot more direct involvement by people in markets. You're there building the alphabet of crowdfunding. Where do you think the capital market revolution goes next?
I think everything's going to be fractionalized, and everything's going to be, I think physical assets, I think real estate, I think yield offerings. I think that the incredible growth amongst the NFTs, right? I think there was close to $90 million of NFTs that were issued in 2020, and I think 25 billion or so in 2021. I think more and more of these digital securities and physical securities are going to be going through the Reg A channel, so that anyone over 18 could participate and buy shares in them. And so I think that's going to continue. It's digitizing the process, removing paper exchange, allows for companies to go through the primary issuance process to offer their shares to the masses, and also facilitate secondary market trading of the private securities. And I think that's we're just at the early innings of the industry here. I think that's going to continue.
We're at the early innings of the industry. Everything is going to be fractionalized. And look at those growth numbers, ladies and gentlemen. I mean, only in 2019 did we see crowdfunding growing more to cross the $1 billion a year mark. By 2020, we'd reached 1.7 billion, and we got 1.7 billion in the first half of 2021 alone. Waiting for those numbers to come from the regulators, but it looks as if, according to Etan, we're going to be over $3 billion or thereabouts during the course of 2021. That's absolutely sensational. We've had an incredible discussion today. Success in the alphabet of the different letters of crowdfunding. Thank you very much to all of our commenters today and questions. Thank you, Simon Huckle, Peter Secon, Mary, Marcus Ward, Anthony Clancy, Craig Richardson, Ian Bonsor. It was a pleasure to hear from Women on It. We're looking forward to your show tomorrow. Charles asks, thank you very much. Robert Brown, thank you for your questions. And indeed, once again, Peter Secon, it was a delight to see Ari on the sofa alongside his dad for the first time. It only remains for me to say thank you very much to Jamil, Natalie, Beata, and Racy for your great help in production this evening. Next week, change of gear after Brexit. We're next for World Trade. We're going to be talking to our special guest on that topic, Catherine McBride. She's going to be hot-footing it back from South Africa in order to talk to our show next week. And finally, last but by no means least, this show has been created this evening with the active participation of our guest, Etan Butler, the chairman and co-founder of the Dalmore Group. All I can say is, Etan, I wish you every success with a vast alphabet of crowdfundings, and may you have at least 200 more great offerings, because you're helping the United States of America and the world to grow in diversity, in universality, and indeed through A, D, C, F, S, you name it. Those letters, they're all important for creating jobs and creating investment. My name is Patrick L. Young. Ladies and gentlemen, I wish you a great week in life, blockchain, and markets. See you next Tuesday for the next IPO-VID.